Okay. You still hear us okay, Cody?
Yes, Brian, and
Okay.
we are live now, so we should be good to go.
Okay.
Thank you all for your patience.
Proceed.
Yes.
Okay, good morning, everyone. Can you hear me in the boardroom okay?
Yes.
All right, super. Okay, this is the February 9th, 2023 Finance and Audit Committee meeting. Call the meeting to order, and Teresa, will you take roll?
Mr. Cook,
I can't hear you.
Mr. Cook,
Here.
Mr. Johnson,
There.
Dr. Pandolfi,
Here.
Ms. Whitehall.
Here.
If there's anyone else on the line, can you identify yourself?
This is Jacob Palma with Forbes.
Okay, thank you.
I'm Renee Larson with Forvis.
Thank you. And I also got Ron Lee's here.
Teresa, we also have Michelle online. I'm not sure if she can hear you or not. Michelle, can you hear us okay?
She said yes. She
Yeah,
said,
Okay.
yeah, she responded.
Great.
Thank you.
I'm sorry.
That's okay. Yeah, what's wrong, Gordon?
Okay. The agenda, I'm looking online. I think there's a couple, maybe just mechanical issues here. One is the notation of the minutes. I don't know if we have to, if that's a standard voting item, but there was not an indication of a voting item. So that should be corrected on number 4.1. Pardon me?
I'm sorry, Gordon. It is as a voting item in the board docs system. Yeah, the asterisk may not be on there, but it is slated
All right.
as.
And then the other thing, just on the board docs, is 7.3, the Prop L scoping expert is not marked as a voting item. Unless you change the Word document, it wasn't on the Word document. So just for
Yes,
those.
it is. Yes, it's noted as a voting item in board docs. So.
Okay, all right. So if that's it, any other changes? If not, I'll ask for a motion to approve the agenda.
So moved. This is Yummy.
Michelle, I'll second.
And what's the easiest way? Take a roll call here or just say aye?
If you don't mind, I would prefer a roll call vote.
Okay, let's go ahead and do that.
Ms. Whitehall,
Aye.
Mr. Dees,
Sure. Oh, yeah.
Dr. Pandolfi,
Aye.
Mr. Cook,
Yeah, aye.
Mr. Johnson.
Aye.
Thank you. The motion passes.
Okay, next up is the minutes. They were posted online. I'm hoping you all had a chance to read them. And are there any questions, comments, changes, corrections? Did I ever say corrections? From anyone?
No, not from me. That's
Okay, if
Michelle.
not, then I'd ask for a motion to approve.
I'll make the motion, Michelle, to approve the minutes.
Second.
Second.
And Teresa, will you take roll again?
Ms. Whitehall,
Aye.
Mr. Dees, Dr. Pandolfi,
Aye.
Mr. Cook,
Aye.
Mr. Johnson.
Aye.
Thank you. Motion passes.
All right, motion passes. Okay, next up on the agenda is the Forbes report. Jacob Holman and Renee Larson are online. We had, as you know, we originally scheduled to be there in person, but the snow changed that. So welcome to the meeting. Jacob, I'm going to let you two introduce yourselves. That way I don't mess it up. Anyway, we're here to discuss the disbursements report. And again, just a brief background on that. About a year ago, there was a fraudulent ACH transaction that occurred. is noted in their report, we fortunately, in the end, received 100% of that money back. It was about $63,000, as I recall. That raised some questions, and it prompted some further investigation. And so the board approved this report, what I'll call the disbursements, and sort of an internal control evaluation of the disbursements process. So Forvis conducted that starting, I believe, in October or November, and wrapped it up in January. So Jacob and Renee, I'll turn it over to you.
Great, thanks, Gordon. My name is Jacob Holman. I'm a partner with Forvis here locally in Kansas City. Forvis, I don't know if we've never presented, I believe, to the Mid-Continent Public Library, at least recently. But Forvis has been in Kansas City for over 100 years. We have about 300 employees here locally, providing accounting, audit, tax, and advisory services. So we were engaged for this project to do an assessment of the cash disbursement cycle. I'm gonna let Renee introduce herself, and then really just kind of talk about kind of what we were engaged to do and what the process looked like high level. Renee?
Yeah, hi, I'm Renee Larson. I am a senior managing consultant with Forvis. I come from the nonprofit world and the for-profit world before this. I've been with the firm for a couple of years. I was the CFO at Ronald McDonald House Charities here in Kansas City for 16 years, and then did mutual fund accounting before that. So I have experience now on both sides of the fence. So when we do assessments, we are looking at the policies and procedures that organizations and have in place. And then we review all those, and then we interview teams, because we want to see what's really happening. We know a lot of times that there can be policies that are in place, but practice actually looks different, or they're or they're doing great and they're following their policies. And when we're doing that, what we're looking for is efficiencies, ways that you could tighten controls, and ways that are best practice that maybe other industries or other, for in this instance, things other libraries could be doing, that are doing a little bit differently to just help improvements. I would say that this is something I wish I had done when I was a CFO, because a lot of times you're just doing the same thing just to get the work done, and you don't have the capacity to really sit back and strategically think, what improvements can we make for efficiencies? So that is the reason that we were asked to do this, as Gordon said, is related to the ACH. So I'm going to do a screen share, if that is okay with everybody, and have Jacob talk through our observations.
And before I go into the actual observations, we really did this on behalf of the committee. So if there's any questions, please interject with those questions or commentary through here. I'm going to keep this really high level. I don't want to necessarily get into the detail unless the committee would like that level of detail. But really kind of high level, when we think about this assessment, this is really a best practice that the organization did to really, like Renee said, kind of have an outside perspective on some of the day-to-day procedures that they're doing. So Renee,
I am unable to share as long as somebody else is sharing. There we go. Thank you.
There you go, Renee. Yep, you're good to share now.
Hey, Cody. I can't see that in here in the boardroom.
Okay, let me change that.
Thanks.
let me know when you can see that in the boardroom.
It is asking me to pair with the room. Is that something I need to put something in for?
No, I don't think that's going to help in this particular
Okay.
instance.
Great, thank you.
You all should be able to see that in the boardroom now. Is that right, Brian?
Yes, it's pretty small. You can do the next thing.
Full screen. That better?
Okay, thank you.
Well, so at the conclusion of our exercise, I will remind the committee, was really at a point in time around December, early January when we did this exercise. So I want to keep that in mind. And I'm just going to go high level over. There was 13 observations that came out of that. The first one on the screen here is that there was 179 credit cards or procurement cards that were issued on behalf of the library. 53 of these cards were not issued to specific individuals. Rather, they were issued to departments or branches. So as an organization, we high level recommend just implementing a review process on an annual basis to ensure the business purpose of why are these cards out there, and really to review, is this a good practice? So I think it's probably been a while since that has been revisited. Definitely something we recommend to do on an annual basis. Number two, similar to the procurement card on number one, when we look at the authorization levels of that, there was 2 individuals that had authorization levels between $500,000 and $750,000. That seemed very high for an organization of this size. So really, we just recommend really just evaluate the pros and cons of having that large of limits. I think that there was the business reason we were told as to why the limits were there. Really were the purchase of books from Baker and Taylor. We really just recommend revisiting those limits. If there is a discount or a reason, from a points perspective on credit cards, going back to the vendor and try to negotiate that with the vendor as opposed to utilizing procurement cards to get that discount.
Jacob?
Yes.
Gordon, if I can interrupt, those 2 credit cards were addressed promptly after you alerted us to that. So that matter has been resolved, and I think in the staff's response, one has been canceled and the other one has been reduced to 10,000. So anyway, but I, this was a significant finding, and I'm glad you guys brought it to our attention very quickly.
Yep, absolutely. So the third thing is something that really comes kind of from our financial statement audit background. Segregation of duties is something we do as auditors when we have audit clients in the public sector. But we really thought that would be something good to kind of step back and have management really analyze. So what we do is we have anybody in this transaction cycle, the cash outflow, really just analyze what are the duties they're doing as the primary individual, and what are they doing as a secondary individual. So when somebody's on vacation, what did they have the ability to do? And really those processes and controls, we kind of bucket those in three categories: access, monitoring, and recording. And really, if there's any individuals that are doing more than one of those 3 buckets, we step back and say, is there a risk to the organization? So this is not uncommon. This is actually a common finding for an organization of your size, but we wanted to make sure that the committee was aware of that. So when we stepped back, there was 2 individuals, finance director and the accounting manager, that really had potential segregation of duties concerns because they could do more than one of those functions. So high level, what does that mean? That really means there's controls in place, but a lot of those are manual controls. So those individuals could get a payment out the system without getting triggered or notified on the front end. Number 4, fourth observation, kind of high level, the cash outflow process was really a manual process. There was no automated system that had workflow approval systems. It really was an email server. That's not uncommon for organizations, but definitely something that we're seeing as organizations are upgrading to new systems, that they're upgrading to those systems that have that automation built into them. So definitely something to think about as the organization looks at new systems. Is a lot of the newer systems have that automation built into the systems.
Hey, Jacob, again, can I interrupt there, Gordon?
Yeah, absolutely.
And we just approved last fall or last summer,
Okay.
The NXT, what's called the NXT software, which is an upgrade from the previous platform, which I believe, Quan, was fairly dated. Do you know, or do we know if this has the workflow in it that can handle an automated approval process?
I'm sorry. I did some Googling on it to see. I used Financial Edge in my previous role, but I had not used NXT. I do think there's some indications they have added automation, but I'm unsure exactly what automation that is without actually getting into the system.
Okay.
So the answer is maybe.
Okay, all right. Go ahead.
All right, so the next item, number 5, the accounts payable subledger is not regularly reconciled to the general ledger. I think it's reconciled on an annual basis for reporting purposes. Something we recommend, again, kind of having Renee's advisory background and my audit background, is if this is done more routinely, more on a monthly basis, the internal financials that are presented to the committee are going to be more accurate. So that's kind of where that observation came from.
Gordon, I have a question on that. On 6.
I'm sorry, I had to unmute myself. Who is asking?
Bob, yeah, I have a question on item 6.
Item 6, is that what you said?
Yeah, I think that's what we're talking about right now. Is that correct?
I just talked about number 5, which was the accounts payable subledger being
Okay,
reconciled.
I'm waiting. I had my question on finding 6.
Okay, and number 6, kind of high level, was there's a couple things that were kind of in this comment, but really it's just the controls when we ask questions and observe really the master vendor file, how stuff got into the master file, if you will, and then what are the processes on an ongoing basis to monitor that file. So Bob, I don't know what your questions are, but we're happy to address those.
Okay. You want to proceed, Gordon?
Yes, go ahead, Bob. That's a question.
Yeah, it's going on your recommendation, middle column, second paragraph. You know, it refers to validating addresses and ways to validate addresses, and is the vendor located in a commercial area, et cetera, et cetera. My only question is, why is located in a commercial area important? And there's so many people now working out of their houses, like I'm sure consultants. I mean, people who that is their income, that's the job function, is in a certain area. So is it an automatic negative if a person is working from their home, I guess is my question.
Yeah, great question, Bob. So really what those were, I think the process right now to get a new vendor into the system, my understanding, and Quan, you can correct me if I'm wrong, but it's really around a new vendor setup form and a W-9. And that's really how a new vendor gets into the system. So we're recommending that be enhanced to ensure that they are a true valid business purpose to have as a new vendor. And those are just ideas. So for example, if we have a new book vendor that we're going to be paying hundreds of thousands of dollars a year, most likely we would want to do something more than just get a W-9 in a new vendor form. We would want to do some kind of test out there, because we know more dollar payments are going to go to that type of vendor. So that would be one that if you did a Google Earth lookup real quick and they came up in a subdivision, that could be a red flag. Now, with training, and if your purchasing department has that same individual that maybe is doing a reading at a library branch, for example, maybe they should come up in a residential area and not a commercial area. And it's really providing that training and looking at what services are we going to engage with them on behalf of the library.
So that's fine. I understand what you're saying. I concur. I just, in this commercial area, just was, as we make recommendations and adopt policy.
Yeah, Bob, this Gordon, just to comment from my perspective, what we're trying to get out of this process, or out of this review, was what I call best practices, and this is probably something that is, if I put a paragraph heading on it, would be best practices to really evaluate your vendor in more than just one form, to make sure you have a valid vendor. Again, with electronic email, electronic invoices, electronic payments, your fraud risk goes up significantly. You weren't here last year. I do have some, if somebody wants the package on the ACH fraud, I think the number I remember was somewhere in the range of $2 billion a year, or maybe it's even worse than that. of ACH fraud. So this is I think an example of what best practices would do in setting up new vendors. So the library has to modify that to its own profile and structure, and again, more common would be commercial, but you're right, there may be some home offices. So
and it's really the training, right? I mean, I think that's the most important thing is the individuals that are entering these new vendors into the system. What are they looking for? And not every vendor should have the same test, right? Because there's different risks for different types of vendors, and it's really creating that system of controls specific to the library.
correct. Yeah, agreed.
Yeah, and I just want to make, and then we will do this as a board, obviously, but I just don't want someone not allowed to be a vendor just because they work out of their house. Certainly the other research needs to be.
100% agree.
Point out that some people are very legitimate and working out of their house. That's it.
Proceed.
Number 7, a fraud hotline. That's something we recommend to all clients, regardless of what service we're providing to them. Really, we think that this is such a high value. There's been a lot of studies. We reference one study out there that really what studies tell you is that if there is internal fraud, the quickest way that you're going to find that is really through a whistleblower reporting that fraud. So definitely something we recommend. I think that really kind of working through this and the observations we've seen is that the library does have a really good open door policy. If there was something, there are channels to report that internally. Something we recommend usually is utilizing a third-party vendor for that. There's a lot of them out there. They're not expensive. Some reasons why you would use a third-party vendor as opposed to an internal channel it saves time. Those third-party channels, typically, depending on the type of commentary that's coming to them, have basically channels on where they direct that information to. So, for example, if it's something that really is not going to raise to the committee's level, maybe that's something that just needs to go to HR, and they can funnel that to HR and let HR take care of that. But if it was fraud that impacted the management, that would go to the committee level, and the committee would be the first one to see that and ensure that they could take care of that in a timely fashion. So that's one reason that we recommend usually using a third party for that fraud hotline.
Just this, Gordon, if I can comment, staff's response to that is that the board policy requires staff to report fraud to the board president or the human resources director. I guess I'm agreeing with you. I think we need to look at this in terms of how our reporting structure, because ultimately that HR director reports to the CEO. I think they're getting into a third party or to whether it's finance committee or the board president. I think there needs to be a well-defined path so that somebody knows they have a responsibility to do that and within a specified time frame.
The other thing that we see that having this third party vendor, this only works if there's annual training and all the employees are aware of how to report when situations occur. So that's the other thing to think through if you go down that path. All right. Number 8, really what this comment, high level, what this observation and recommendation was really around more training. I think that there were some individuals in the cash disbursement cycle that were less tenured than some of the employees that had been doing the positions historically were. And really, this is them reaching out and asking us and saying that they want to be trained on some of these areas. So that's really what that is. Just the employees really want more information and more education around relevant cybersecurity threats and security awareness training, which is, from an outside perspective, a great thing. That's the kind of employees that you want. Number 9, high level. I think that there is a state statute out there that requires disbursements to be reviewed and approved. we noted that there was a detail for high level for employee credit card purchases. The detail was not getting approved. It was more the aggregate. So really just revisiting some of those internal policies. Number 10 is a best practice.
Jacob, can I go back to number 9?
Yep.
There are a couple things in your recommendations.
Yep.
That I guess I'm, again, going back to best practices. One is the statutory compliance, which I believe we're Ron, you can correct me. I thought we were trying to get an opinion on that. But the thresholds is best practices to set thresholds. Did you say that? I guess
Yeah, definitely. We recommend thresholds being set. So typically we see a lot of those thresholds before things can get paid are actually built into the system when you have that automated system. All organizations are different, but even sometimes we'll have clients that have board access into some of those systems. Maybe it's only read only, but definitely having authorization thresholds.
So, and I'm looking at your wording here. If best practices is to have authority levels and approval levels, should the report be more precise in that statement? Is that something?
Yeah, I think that's a
you're
fair
willing
statement.
to. I think consider setting approval is leaves too much wiggle room. I think best practices is that we should have authority levels, and if you can say an example of one in a comparable industry is X, everybody has to adopt that to what their specific situation is, but maybe an example will help as well. So.
Yep, I appreciate that. Number 10 is an observation that employees were allowed to take PTO, but they weren't necessarily required to take PTO where somebody backfilled their position. So what we recommend is really that the key employees in this transaction cycle take off at least a week when they're doing their key controls. So if somebody's required, for example, to do a month-end review or a month-end procedure, that they at least take off 1 month or 1 week when that procedure is required to be done. And that does a lot of things. When you have somebody else that's required to do your duties at least once a year, obviously that could mitigate potential fraud because somebody's aware that somebody else is going to be doing that control. The other thing it does is cross-train. So in this environment, when there is a little bit higher turnover than what we've seen in years past, you're going to have 2 people that know how to do all the responsibilities within the transaction cycle. Number 11 is really around a multi-year capital plan project budget. I know the committee's had some discussions on this, just reading some of the previous minutes. But high level, really just a recommendation to have a periodic reconciliation of this project budget completed back to finance records, as well as including other types of areas or all of the areas, I guess, the third-party contractors, furniture, fixtures, equipment, IT, architecture, and engineering, all in that budget, so you can kind of have a complete picture. Number 12, similar to the capital plan that's going on, we were not engaged to do a detailed review of the capital plan, but since this is one of the major cash outflows of the organization, we did ask some pointed questions to kind of gain an understanding of the incremental policies and procedures that are in place when you have a large capital project that's going on. High level, we asked if you had a surety bond, are you required at certain thresholds to have an owner's representative or a construction audit? And really, it sounds like maybe some of those things happen if they're recommended by the contractor, but there's no policy in place currently for any kind of dollar threshold. So typically we see over certain dollar thresholds, some of these things are required to happen. The last comment or last observation really is around the budgeting process. So I think that there's a good budgeting process in place where the organization looks at budget to actuals on a line item basis, but not necessarily breaking up the individual department's portion of that line item, if that kind of makes sense. So really just making sure that the organization, if you go to a new system, a lot of the systems have the capabilities when the department only gets a portion of that line item to really monitor that on a department level basis. So the thing to think through here is you always want to weigh your benefits versus your costs. So we want to make sure that this is something that would benefit the organization, but definitely something that we see in practice.
And Jacob, this is Gordon again. This has been a discussion item over the past past several months and through the last year's budgeting process. So I know it's on the table, and it was part of the discussion with the NXT system. So I'm hoping that we can move forward with something like that. That can make sense.
So I appreciate that, going over the observations. Like I said, more than anything, I want to make sure that the committee has a chance, if there's any questions or comments on the process. This was a really quick, high level assessment from our perspective. Definitely, I think there's some good observations in there, some recommendations on how the organization can revisit some of these controls and processes that maybe haven't been revisited in some time. We also kind of put on kind of a priority next to them that says kind of how quick we think management should kind of revisit some of these, and then really some next steps. So if there is any interest in Forvis helping with some of these as the next steps, we're obviously happy to help with those procedures. So any questions?
I'll open up the floor to questions or comments. Aaron? Ron, go ahead.
Jacob, thanks. I had a question with respect to the credit cards. You mentioned a rather prodigious amount that was the credit limit. Was there any perspective on the individual charges against those cards?
Yeah, great question. So we actually didn't do a review of the individual, like we didn't take a sample and sample and actually look at the business purposes of those expenses. We really looked at the policies that were in place and the approval thresholds, the number of credit cards, not an actual sample of expenses.
Okay, and then you also mentioned, the pretty basic separation of duties and mandatory time off. Is it your opinion that there's enough personnel to actually accomplish this, or should there be additional staffing for the whole treasury, accounting, finance area?
Yeah, that's the question. That's a standard question that we always get at the end of any assessment or financial statement audit is, what is the appropriate staffing level? And I think that first off, I would say that because of the manual processes that are in place, I think you probably have enough employees if some of this stuff is automated to potentially get rid of some of these segregation of duties. So I don't know if it's the number of employees necessarily, but really because of the manual processes that I'm not sure that they have capacity at this point to work through some of these things.
Okay, and then with respect to the accounts payable, obviously we're on at least a modified accrual basis. So at some time, there's an entry of a credit or liability and charge some kind of expense, I guess, or something like that, or an asset. Are you saying that that's being done properly, just not reconciled to the general ledger until a later date?
High level, our observation was, I think you guys had good controls for year-end reporting when you report on a modified accrual or full accrual when you do the conversion to the government-wide statements. Sure. But throughout the year, the other 11 months, I'm not sure that you're putting stuff in the right period. You're really just putting it into the system to get out of the system and pay the vendor timely.
Okay. And then the last question I had was with regard to the third-party whistleblower services. Do these organizations determine at which time to notify management? And a second question on that is, do they also determine the accuracy of the charge being raised by the whistleblower?
There's different levels of services you could get. Our organization provides one as that we have fraud valuation individuals that are trained in this and certified that handle the hotline. And typically what we would do as an organization would work with management and the committee on the front end that says, what kind of information do you find important and would you want reported to you, and figure out what channel to set those up to. The remediation and follow-up, it typically is not part of that service. It could be if that's something that you're interested in. It really kind of depends on what you purchase. And but without obviously knowing what kind of information is going to come through on that hotline, it's hard to have that kind of a preset plan on what the next steps are, though, if that makes sense. But the reporting, you for sure on the front end will get information about what do you want to report to the library director, what do you want to report to the CFO, what do you want to report to HR, what do you want to report to the committee.
But then once information is given to this, or for example, you in this case, would you actually try to ascertain how valid the charge is?
Yeah, absolutely, but I think it depends on kind of what types of charge is out there. So whenever we do audits, we actually get a listing. If you have an internal hotline, we would get a listing of all of the complaints that came through that hotline. And that's something we would do on all of our financial statement audits. And a lot of times what you see is there's a portion out there that there's just not a reason that would make it up to the committee level. The types of comments that are going out there, generally, we would not follow up on those types of comments. Those types of comments, HR, it's in their wheelhouse to respond to and take care of. And then usually on an annual basis, there could be 1 to 3 items that we would follow up on and make sure that we understood it was resolved timely and appropriately, and there wasn't any additional actions that needed to take place.
Great, thank you.
I have a comment. Gordon. Let me just, I want to thank Forbes. I thought that I'm impressed by this report for the weekend and the recommendations, and priority recommendations, priority of the recommendations. And so I just want to thank you for the work you've done. It brought to my attention a lot of issues that we probably as a board need to resolve, and I appreciate the discussion.
Great.
I just want to thank you. Excellent work.
We appreciate the opportunity to work. The thing I'll add is that management was very open and was really taking this as a best practice because they wanted to improve their organization. So I think that's a positive thing as well. Gordon, you're on mute.
Michelle or Yummy, do you have any questions or comments?
Michelle, I do not.
Okay. Yummy?
No, but yeah, again, really appreciate the report.
Yeah, I would agree. I think this brings to light a number of things that can be improved upon, and just to enhance the integrity and the internal controls around things. There's some things that obviously have to be addressed, and some of these may be easy to resolve. What I call low-hanging fruit, and others are going to take some work. But the biggest thing I think is just to protect the assets of the taxpayer, and that's where the priority list comes into play, and how management goes about addressing these. But I think it's well done, and I appreciate the way it was handled and the way you presented it.
Great.
It's wonderful working with your team.
Good. Okay, if there's no other questions, Jacob and Renee, you're welcome to exit. And we do have to talk about how we handle the reporting to the board on the 21st. I don't know that we need to go through the detail to the same degree, but we'll talk about that between now and then, if that's okay.
Great. Thanks for your time. We appreciate the
Okay.
opportunity.
Thank you.
All right, bye.
Okay, we ready to move on to the next item? Which is the monthly financials, and Quan and Aaron, I guess I'll turn it over to you two.
Hey, Aaron, yeah, I will give you some just highlights for the financials for January 2023. The biggest thing is the tax revenue. We have received about 80, close to 90% of budgeted tax revenue, which is about $48.9 million in operating fund, plus $6.58 million in debt service fund. That's very close to the last year's number, although it's a little below last year's number. But this is expected. Again, for operating fund, we are at 89% of the budget. Last year, it was at 88% of the budget. Also, on the expenditure side, the payroll and benefits, that's 57% of the budget. Library materials, that's all 60% of the budget. All other operational accounts, 50% of the budget. I have moved the interest income to the bottom of the report. We have received over $340,000 so far for the operating account.
Hey, Quan, this is Gordon. Can I
Yes.
ask you a question? Is when you say net investment return, is that because I know in one of the pages, you have unrealized gain and loss for the period. Is that all in interest income, or is there change in unrealized gain loss in this 344? Is that what is?
That's interest income, net of expenses, plus unrealized.
Okay, and how much of that is the unrealized gain loss?
For operating account, I think that's about, it's a little below 100,000. That's about $80,000.
So this includes the capital fund?
No, that's operating fund.
Strictly the operating fund. Okay, all right. Okay, I don't want to get into any more. Can we break that out next month to where we can see what I'll call the earned income versus the unrealized change?
Yeah.
I think that'd just be helpful in terms of looking at what the cash flow is. So, and since I'm on that, I had a question on the balance sheet. I know you're going to get to that, but the cash you have on the general fund is about 7.9 million. I know we earned some interest on that. Do you know what is the rate on that, and how aggressive are we being in terms of managing the cash through the trust, what I call the trust department of central bank? Because short-term rates are not what they were 2 years ago. They're running 470 to 480 right now. So
yes, the rate is much higher now. I believe it's a little over 4% for money market.
is that what we're getting on what I call the bank account?
Yes.
Okay. all right,
for both sides, the investment side and also banking side.
okay,
During the month, we transferred $29 million to the investment side. So that's,
okay, all right, go ahead, proceed, sorry.
yeah, I just, okay. For capital project fund, the total expenditure is little over $9 million, which is close to half of budget so far this year. The debt service fund, we recorded a $6.58 million to that fund. I'm sorry, the page 37 is not a correct statement, but it should have $6.58 million on page 37.
I don't think we're on the right page here on the screen. There you go.
Sorry.
We don't have page.
Okay, all right. So
I'm
you're
sorry,
saying,
I'm looking at the PDF, PDF report.
well, just
Yeah,
make sure everybody's following you. We're on, if you're looking at your own PDF, the debt service fund is page 6 of this 28-page PDF. So can you just replay the tape there?
Okay. On that, okay, on the screen, that's not a correct statement. The statement should show is $6.58 million as tax revenue for the fund.
Okay,
Yeah,
so you're saying the transfer got made in January?
yes,
Okay, all right.
and the payment for the second payment is due in this month. And
So, and sorry to interrupt again, but so back on the, okay, you have it in the, the general fund operating statement.
yes,
That's okay. I'm with you now. Go ahead.
okay. For health insurance, the contribution is $1.8 million, about 50% of the budget. The administration fee, stop loss, that's about little over $600,000, 60% of the budget. And the medical claims and drug is about $1.28 million, right now it's 40% of the budget.
Just to comment there, so this again, you have, when you say claims and drugs, that 1,260,000, that is an incurred, is that just a paid number? Does that include reserves? Does that include any, what I call IBNR? Is that, where does that number come from?
No, on the liability side, we recorded $353,000 as income, but not yet reported. And we will adjust that number in June.
But is that 353 is included in the 1,260,000?
No. The $1.26 million is what we paid through December.
Okay. All right, let's talk about this separately. It seems like your income statement is a cash basis.
Yes.
The balance, go ahead.
Long-term provider the other liability numbers once a year to us in June. So I will adjust that.
All right. Yeah, that's something we can talk about afterwards. It seems like to me the income statement should be on an incurred basis, including the change in the claim liability. So to give because your budget would obviously include that, or does it not?
The budget should include.
Okay. So I think we just need it sounds like those aren't synced up, and we probably should do, or at least I would like to see that, so we can talk about that outside of the meeting. Okay, go ahead.
And also, there are some new reports being added. The first one is the investment.
Rudy, can you flip to the next page?
Yeah. This is, I'm taking the beginning balance is the market value at December 31st, 2022. I added the investment income we received plus the market value adjustment to get an ending balance for capital investment at January 31st for $23.9 million. The cost basis, $25.9 million. So we are about $2 million below the cost. For operating fund, the only difference is on the investment income, $6,303. That's net of expenses. The monthly expenses, $2,500. But because all the investments are under 6 months maturity date, so the market value is a little higher than the cost at the end of the month.
Quan, what's the duration structure you have for the operating account?
It's between 3 to 6 months.
Okay, all right.
And I will keep adding each month's number to that report.
Okay, great, thanks.
The next one is the next page is the legal and consulting expenses. I have listed the companies we have paid for consulting services and the legal services. The numbers reflect total amount from July 1st, 2022 to January 31st, 2023. And it will show the monthly expenses starting February. The next page is the conference and travel. That report includes continuing education. And it has 3 segments now. The top one is the list of conferences. The middle one is the training. The last one is employee knowledge reimbursement. And I didn't have time to compile the report for the whole fiscal year. I just started in January. So the numbers reflect what we paid in January. I will keep adding each month to the report. The next page. Okay, I'm sorry. That's the end of my report.
Is the, okay, it's there. Why don't you just do a quick overview? Because
Okay.
these are, I think, separate items on board docs. Oh, no, I'm sorry. This goes to 6.2. Are there any questions on the, let me just, are there any questions on the financials before Quan talks about 6.2?
I just had one question related to expenditures personnel. How many full-time employees does the district have?
We have about 350, and Jennifer may know better than I do, but I believe it's about 350. full-time employees.
Hey, Bob,
Yes.
that is, whoops, I clicked the wrong tab here. That is, if it's okay, that's item 6.3, which we'll talk about next.
Okay, that's fine.
Is that okay? Because that Quan, there are a couple disbursement schedules that Quan has put in the financial package that are new. Well, they're new and improved. So Quan, go ahead.
Well, one other, I just want, let's thank you on the personnel, but on the, again, I know I asked for it last time, I just want to make sure on these unrealized gains and losses on investment and so forth. our policy is to hold to maturity.
We don't have a policy, practice. It's hold it. Okay, under the 6.2 disbursement detail, there's a new report. Tony, you can show the key columns. Yes, that's the all transactions charged to all credit cards in January 2023. You list the name, date, merchant, and description about the purchase.
Hey, Quan,
Yes,
I just one question on this schedule. I kind of did a quick perusal of it, but what I see a number of individual transactions are something that's labeled as exceptionality employee resources. Can you tell me or tell us what that is?
okay. Part of the budget is to have a program called exceptionality. We give about $35 per employee, the amount to each departmental manager and branch manager. So they can reward the employees based on the performance.
And
So,
just so I know, where is that in the general fund? Is that part of payroll and benefits, or is that part of?
yes, that's under the account number 5110.
Oh,
In payroll.
okay. Okay. All right, go ahead.
Okay, and yeah, those are it has a list of all transactions. So if you have any questions about anything, just let me know. We can pull the receipts. All employees have a credit card are required to upload the receipts, and the managers are required to approve them on a monthly basis. We are about 1 month behind reporting, so everything you see in January was happened in December. The next report is the vendor payments.
Hey, Cody, you should be on page 20. Oh, there you go. Yeah.
This one shows all payments we made to all vendors, including computer checks, electronic fund transfer, and some automatic debit to the bank account. And I have 3 categories for the payroll, library materials, 4 categories. Payroll, operating, library materials, and a capital. And at the end of the report, there was a summary to show total amount paid for each category.
Quan, can I ask this, Gordon, can I ask you a question on this, on Cody, if you want to skip it up to page 20, 21 of 28. Oh, no. Oh, no, you're, I think this is a 28 page. Oh, I'm sorry. You know what? I have mine combined to a, this is on the second page of that disbursements detail that we just talked through. That this, go past the purchasing cards. I'm sorry. Okay, next page right there. Okay, so right in the middle of the page is a line called Central Bank Purchasing Card. Can you tell us what that is?
Okay. All the credit card transactions you just saw on the previous page, there are all employee credit cards we paid as we make one recording in financial system. We call the central bank purchase. Then we also use the credit card to pay some invoices directly to the vendors, like Bacon Taylor and Verizon or UPS. We record those payments as individual bank payment in the vendor's account. So everything we are also we are one month behind. So everything you see previously for December credit card transaction, some of them being recorded in January, and some of them was recorded in December.
Okay.
Your question, that's all employee card holders transactions.
Okay, Cody, can you flip up to the page preceding that? I think it's the first page of this report. There we go. As second question, and right in the middle of the page, you'll see a bunch of purchases or payments to Amazon. And again, I don't want to go through the detail here. It's just a general question about our vendors and our vendor selection. Is the library policy such that we're using the vendors in our 3-county area as you know, they're the ones that pay the revenues. So I'm just wondering what decision process there is in terms of how we purchase different things, whether service providers. And you and I talked about, I went through with several, I picked up several vendors on the last month's transactions, and whether we're using what I'll call vendors or service companies, et cetera, within our 3-county area. But the Amazon kind of raises the question: are there things that we're buying through Amazon that could be bought locally? Or I mean, I don't expect you to know the answer to that. It's a general question for management and how we proceed here. So,
Gordon, actually, for the committee's information, we do use a local vendor called OPA for most of the office supplies, but OPA does not carry everything we need. And I believe OPA is willing to make purchase from Amazon for us for a very small fee. Because Amazon and the purchasing from Amazon may save us some money, but there is a control risk and also a lot of paperwork involved, staff time involved. So I agree, we prefer a local vendor, and if the local vendor can save us money by acquiring from Amazon for us, even we have to pay a small fee, maybe it's worth to look into.
Yeah, you're saying the cost benefit, the net cost benefit is, or the cost offset is just the internal time I'm spending on this. So, okay, all right. Go ahead. Those are the only questions I had for comments. Anybody else? Ron, Yummy?
Yeah, I have a question on the vendor listing here that you provided. I'm assuming when that payment is made, the system has the payment go to a particular account, and that account has some kind of a narrative description or something. I'm wondering if it would be difficult to have future presentations of this have a little bit more detail than, for example, the way of operating. Like the real easy ones, like in my case, I was paid and it was mileage reimbursement. Would it be difficult to have more details such as mileage reimbursement?
Ron? I'm barely hearing you. I don't know what's happening with the so.
Okay, I can answer that. Yes, but the report will be much longer than this, because when we we make a lot of payments to the same vendor every month. The payment is for multiple invoices. Each invoice may have its own purpose account. So for one vendor, we may have a lot of different accounts and purposes for the payments. So one vendor can have the operating and the capital or payroll. So we can provide an invoice-based report. Each invoice can show the account code and description, not payment report, if that's what you like to see.
Okay, but these amounts that you have here are in the aggregate period, right?
That's per payment. So like, for example, Amazon, you can see a lot of Amazon payments, but each payment can be either operating or capital.
Broken down supplies to textbooks.
Yes. I believe that's my thought,
All right. Are there any other questions on it? Michael? I see you popped into the meeting, so you're welcome to ask a question if you like. But if not, if Yami and Michelle, do you have any questions? Otherwise, we'll proceed to the personnel schedule.
Nope.
No questions here,
Is Yami-
Gordon.
Is Yami still with us? Yes, she is. Okay. She's muted. All right. Personnel. So Aaron, Jennifer, proceed.
Jennifer, are you here with us?
I am here. Good morning. The report doesn't really have anything this month that's particularly outstanding. We're at the 56% on spending for salaries and wages to budget for the fiscal year so far, a little bit under percent-wise where we would expect to be, but we do have some places where we have not had staff, or we currently do have staff. We also are evaluating, looking at some operating efficiencies before we fully implement or start to implement the results of the compensation and job analysis. And to answer the question previously, we have 379 full-time employees, 38 half-time employees, and 383 part-time employees.
Can you repeat those numbers, Jennifer?
Sure. 379 full-time,
Okay.
38 half-time, and 383 part-time.
Okay, and just a refresher, the halftime, the difference between halftime and part-time is what?
Half-time is exactly 20 hours a week. It is a benefits eligible position that's eligible for some benefits such as paid time off and participation in loggers retirement, which is a threshold that was set when loggers was created and Mid-Continent enrolled in 1968, I believe. Part-time employees are variable schedules. We have them work at least 8 hours a week, but they are capped at 950 hours in a rolling 12-month period.
Okay, thank you.
Yes.
I have a question.
On the,
And I got the other day, so we have 379 full-time employees, and I know we're going to look at credit cards later on. We have 179 credit cards. I assume at least you have to be full-time to be eligible for credit cards. probably correct.
Departmental managers, assistant managers, some professional librarians. Yeah, they all have credit cards.
And just to add that number's been reduced. So we're now closer to maybe 130, and then we're evaluating the remaining cards. So that's all.
Thank you.
Jennifer, is that it?
That's all I have, unless anybody has any questions for me today. And I would like to offer, you know, a summary of the exceptionality program, since that is administered by my team, and the budget for that is administered by my team. If at some point in the future, if that is, if we're needing that, if you are needing that.
Okay. No, it just was different. That's why I asked about it. So.
Sure, absolutely.
Any other questions? If not, we'll move on. Yami or Michelle? Okay, let's proceed then. We will go to the old business, the capital plan, actual versus update. Is there anything to report on this? Aaron, Kwan, I don't know who else is in the room. I think the last update we had was using November 30th numbers. So,
Do you have anything?
No, I'm sorry.
Oh, the question was about the capital plan versus that. Whether or not there's anything.
No, I gave Jake the January's spending. I'm sorry, I don't know if it's updated.
All right, we'll get back to you. I'm not aware of anything to report, Courtney, but we'll get back to you.
okay, well, we spent $1,731,000 in the month of January. I'd have to go back and look at what December was, but because the most recent schedule we have is as of November 30th. So we have 2 months running here where we have cash going out the door, and we should have an update on this thing.
Okay, so we'll get that to you. Jake isn't with us today, but
Okay.
we'll work on that and get back to you.
Okay, thank you.
Well,
All right, the next item is 7.2, which is the dashboard review. Cody, there are 2 documents on board docs. One is the PDF, and I'm just going to ask you to bring that up. Can you get that to a full? Can you get that to the full screen?
Let me get the.
We're not going to,
PDF.
by the way, are you in the Excel file?
No, I'm not in the Excel file. This is part of the presentation. Should be the PDF, but I can pull the whole PDF.
No, I need you to bring up the Excel file.
Okay.
There is, let me get it here. There's a building committee dashboard, March 14th, 2022. It's just a 1-page PDF. I want you to bring that up first, and then I'll also want you to bring up the Excel file, and then I'll take the board. I don't need the Excel file in PDF. I just need the Excel file itself.
Do you want the PDF or the Excel file first?
No. I just want that building committee dashboard, I'm sorry. The onboard docs, there's an Excel file and a PDF. Just I want you to bring up the PDF at this point.
Got it. I've got the PDF. Let me share it. Just one moment. You should see it now.
Okay, this is the March 14th. If you scroll down so they can just, you don't have to, we're not going to stay down there. This is dated March 14th. This is the one that was on board docs a year ago. It's the one I've kind of had in my folder ever since since we started this process, and you'll see the columns there. And if and what we've seen is a PDF. I had requested last month the actual Excel file, which I received. And so if you will bring up the Excel file at this point. If you remember last June, I had sent to the committee chair and to management the Excel file showing that the column, JE done current did not total to 84,500,000. Are you there now? Click on the 2122 R2 tab. Is that what you're on? Oh, okay.
Doesn't help if I'm muted. Yes, I'm on that tab, Gordon.
Okay. Scroll down. There should be what happened to the section I put in there?
Let's see if it's on any of these other tabs here.
No, I thought the file I sent was.
Might be. Does this look like what you're looking for, Gordon?
Hold on, sorry, I got to get back to you.
Okay.
Oh, I'm sorry, click on the summary. Okay, now I know where I am, never mind. Sorry. Okay, so the summary tab, go back to the R1, 2121 R1 tab. All right, and I'm not going to make you do this. If you do a print preview on this tab, it produces this PDF. Okay, so those are the numbers we saw. Cody, just go up here and click on one of the cells in one of these columns up here, and you'll see just click, pick a. Okay, so you're going to see up here in the formula line. If you go up there, you'll see that comes off the summary tab. So let's go to the summary tab that I've highlighted. And so I've highlighted in here a couple numbers. So the first one is on cell J23. You see the 84.5 million. Cody, will you click on that cell and hit F2 for me? Hit your F2 key. Okay, so just so it's easier for you to see, you'll see that is the sum of the numbers above. And then there are several other numbers that are subtracted from that total. Okay, so if you recall, I had discovered that this PDF or this dashboard did not present the total accurately. I sent that to, as I said, I sent that and there was no response on that. So we proceeded for several months here to try and get the information. This was finally received in January. So if you'll see over in column or in cell O16, that is one number that's subtracted. That's the land acquisition for North Oak. If you will scroll down, Cody, you can now scroll down the page and you'll see that keep going. Okay, so all right, right there, stop. You'll see I just highlighted and showed you the individual mechanics for how that cell total was derived. Okay, so you'll see all those individual numbers back on the cost tab. Cody, if you'll go to down where the little arrows are on the bottom. Nope, keep going to your left, right there, right click. Okay, and then I want you to go pull that, scroll down, just pull that and go to the cost tab. And back here, you'll see where I've highlighted the numbers that are used in that formula on the summary tab. Now you need to scroll down a little bit. So what happened mechanically is that if you recall, there was a contingency reserve. And so the contingency numbers were being spread to different work packages. as an example, cell 40 is used, but cell 40 is the sum of 38 and 39. And on the summary tab that I just showed you, I pulled up each of those individual numbers, the Green Hills property savings and the contingency. So in the same thing, I believe it's the same way I did the rest of those. So you don't see those numbers, you'll see the components of those totals anyway, but the cell references these numbers that I've highlighted. So now you can go back up to the summary tab. Okay. So I think we're, as we explained last month, we're significantly over budget on the original project plan. The board, as you're well aware, approved individual work packages or individual projects. There was not a report that said, here's where we stand inception to date, and where we expect to land, including uncompleted or projects in process against that original plan. As we just saw in the Forbes report, they made a comment on this same issue. So this is kind of the last, I think the last element of, how this was mechanically done and presented to the board. I've said that it should have been presented differently. We're not going to go back and through those schedules at this point, but I wanted you to understand how this was done, why the dashboard presented the number it did, and why the subtotal or why the total of that column did not present accurately the details of what was above in those individual components. Any questions on this? Comments from anyone? Ron, Yummy, Michelle, and Bob. Sorry, Bob. You're not visible. You're not in my eyesight. I apologize. I'm not excluding you. I see Aaron and Ron on the screen here, so I apologize for not calling you out as well.
I just have a general comment. Is that the dashboards or placements that we receive for basically the singular source of information given for regarding the financial expenditures, and at least in my case, almost absolute reliance was on the accuracy of them. And I think on an ongoing basis, presentation was that there was quite accurate compliance with expenditures to budget. And I don't recall once ever hearing that there was a possibility of the remaining funds not being adequate to cover the remaining projects. That's all.
Michelle, are you there?
I am.
Do you have any comments or questions on this? I mean, I know you've been on the building committee.
No, I mean, it makes it. Yeah, I mean, I see it. Is what it is.
Yeah.
Yeah, this is Yummy. I don't have anything further to say. I mean, I think I've stressed that point over and over about the building committee, how we were presented information and told that everything was perfectly within budget. So, I mean, it's, yeah, that's it.
But I appreciate you showing how we,
Well, and I'm going to make a general comment here about. I think this is an element of internal control, and I'll leave it at that. But I'm going to go back to the Forbes report. This, as I recall, and I will stand corrected if I'm stating this, not stating this accurately, but this was never synced up to the financial records in the accounting system, as I remember, until we got the report in December. I think the first report we got was in November, where it was attempted that we get it synced up. And I think the more accurate report was the one we discussed last month. And I think that's an internal control issue. And obviously Forvis, pretty much hit the nail on the head. And it is critical that the board, be assured that the information that's being presented is accurate and reliable. Basic element of financial reporting is, accurate, reliable, consistent, and if it doesn't have those characteristics, then we need to evaluate how it's coming out. So again, this is kind of wrapping up why we're where we are with this thing and how it was done. So, which, if there's no other comments on this thing, on this piece, I'd like to go to 7.3. Is that okay to proceed there? Anybody? Any other comments on 7.2, the dashboard? Okay. As you recall, we had asked for a change in the PropL review project. It was initially approved that we would put an RFQ out to the different parties. As a result of some discussions and just the way the initial RFQ was drafted, two issues came out. One is the concern that we would have a wide range of responses because of all the detail, and really what a lack of precision in what it was we wanted to accomplish. And secondly, was all right. So now I lost my thought train. So we wanted to clarify this, so we broke this down into two pieces. In the process here, we had talked to at least two different firms that asked the committee to respond with other candidates. There were none that were returned. I think Aaron and Quan had reached out to a couple. One was actually Forvis, who about a week ago indicated that they have independence issues and withdrew from wanting to do this. The other one was Hood, which is our current auditor, and we felt that would be that has a potential conflict in terms of their independence and this project component and going further in detail. So at this point, the only candidate we have is CFO Systems. As you recall, they presented last month. They have local people. They have the qualifications to do this. One of their local representatives is Michelle Phelps, who has 30 years in the industry. And the other staff they have has relevant construction experience as well. So you have a very brief engagement letter that was posted in the board docs. The scope of it, and I'm just going to read it. The primary function of this engagement will be to provide an initial evaluation of the data provided by Mid-Continent Library for the purposes of defining the scope and framework of the PropL capital plan review to be used in a request for quote for an expanded detailed review of the PropL capital plan. So that's the scope of their, that's the purpose of the engagement. It is limited. I've called it a phase one. We put an $8,000 cap on it. And the motion that was presented or that was prepared for this, and I'll read the motion, is a motion to the board to engage CFO Systems to define the scope and framework of the PropL capital plan review. Such result to be used in the RFQ for the expanded, more detailed review of PropL expenditures, and with total professional fees and expenses for this scoping engagement limited to no more than $8,000. So that's, I guess I'll make the motion for that, and I need a second, and we can have discussion.
Second.
Is that Bob?
No.
Okay. Okay, I'll open it for discussion.
This is Bob, and I do have some comments, questions.
Go ahead.
Thank you. I've thought about this since we had our last meeting, and I haven't built commercial buildings in my life. I have several residential units, and so we have debated this, not debated, we've discussed this quite a bit in the 3 months that I've been here, and again this morning, and I think there's no question that there's a gap somewhere between what agreements for certain building, for certain construction projects that were approved, and probably there wasn't a whole lot of follow-up the next 2 or 3 years on what's the actual cost going to be. So I'm reviewing and I wasn't here, and I'm not accusing anyone of anything. It's just that I don't know any builder or contractor that would agree to long-term contracts that are limited to certain prices. I would never today enter into a contract with any of you to build a house starting a year from now for a specific price. You just can't tell the future. You can't tell a year, you can't tell 3 years. And I look back and I remember some of the thoughts that as a home builder we had a few years ago, and this is not political. But in 2017, there was a tariff played by the president of the US, imposed a tariff on Canadian lumber. Canadian lumber is a big source of lumber products in the United States to build residential housing, and I'm sure commercial buildings. 2x4s are 2x4s, and 2x6s are 2x6s, and dimensional lumber is dimensional lumber. So that was a 20% increase right off the bat for the cost of building something. In 2018, there was a steel tariff of 25%. Everybody uses steel in the construction project. So the point being is that, yes, these need to be tracked closer. I think we proved that. At least I believe. So I guess, so Gordon, here's my question is that what are we looking at with further Prop L review scoping? Haven't we already kind of answered that we need to be closer to this? And that's my question.
Are you done?
Yeah, that's my question.
That's all right. I couldn't, sorry, I couldn't hear. The reason we are doing this or had proposed doing this is that one, it was really controlled by 2 people in the library, as I understand. Okay. The information around this, as we've talked about and I've discussed throughout over the last several months, was not forthcoming. You told the taxpayers you needed $113 million to do this. We're spending $130 million, or at least that's the current estimate. I don't know where it's going to land. And the board is just now finding out that we're $17 million over budget. There are standards within the industry. There are best practices within the industry. And we don't know to what extent, at least the board has no assurance that those were adhered to. I do know the finance director was not involved in this process or in the process other than making payments. And as we know, the finance director was not involved in the reporting. So the whole purpose of this is to get some assurance that, now that the 130 million is being spent, at least we followed standards, and there aren't some things out there. The architect has a contract. I don't know that everything is in accordance with that. The way we paid the contractor, I'm hoping they followed best practices and standards, and there's nothing unusual, but we don't know that. And this again is to provide some assurance to the board and to the public, and more importantly to the public, that those funds were used appropriately and for valid expenditures. I don't know what else to say other than that.
This is Michelle. Can I, when you're done?
Go ahead. Thank you.
Speaking as somebody who approved all these expenditures, I would have appreciated, we all knew things were going up. And I mean, you're a builder, if you were building a house, and I've built a house, and, I guess I see people all the time in my world, and I mean, just in the world in general, like you start going over budget, people have to stop doing things. They have to make changes. And we asked questions, and, clearly we weren't told the truth. So I'll go ahead and say what nobody else wants to say. I think we owe it to the taxpayers, and you've been involved in politics for a long time. And every politician I have spoken to, including a couple of my commissioners, no one disagrees with me that we need to prove that we spent the money wisely. The trust that I had 11 years ago when I got on this board is shattered. I don't trust what I've been told anymore. And I think we owe it to the taxpayers to prove that all that money, if it's all on the up and up, and it's just because building materials went up, fine. But no one had the authority that went $17 million. Nobody had that authority. The people that were in charge of reporting to us where we were on the budget, they failed. They failed. That's how I see it. And I don't understand. We waste plenty of money on other things. I don't understand why we wouldn't prove. I don't understand why we would not prove to people that we went over, and this is all legitimate expenses. So that's where I guess my level of frustration is, because if there is fraud, I want to know about it. And I think we owe it to the taxpayers to say, yep, we're over budget, but it's all because of the tariffs. It's all because of all the things that you said as well. That's my, maybe I'm wrong, but I can't. I mean, two of my commissioners, when I have said that people do not support proving, and doing an audit, their eyes have gotten huge, especially with the dollar amount. So I guess I'm more baffled that we wouldn't want to prove to people, or do we not want to prove it because we want to protect the people that could be at fault? So those are my issues with it.
Can I jump in, Michelle? Are you done?
Yeah, I'm done.
Bob, I'm gonna add to Michelle's comments a couple things. One, you establish a budget and you managed against the budget because those are the revenues you decided you were going to allocate to it. And I wasn't here for the process for all of the construction, but if you recall, the architect said we were, sorry, I got a train coming by.
Sounds like it's right here.
I kind of enjoy it, so I can tell which way they're headed. When you have a budget, you're going to build a house, you say, I can afford a $300,000 house, and you say, okay, for that house you want to build, and maybe your design process starts a year in advance, and by the time you get to starting construction, everything's up 20%. So that buyer has to decide if they want to spend $360,000 on that house, or they just say, you know what, we can't afford it. or we're going to make some changes and we're going to take off a room or whatever. I don't believe happened here. In fact,
No, I don't think it did. Sorry to interrupt you, but I don't
go
think
ahead.
it. And that's my problem is, okay, we should have known. When I built my first house, that was it. Okay, I know I've got this budget for carpet. Okay, I don't like it. I want to upgrade. Great. So I did it. I paid for it. If had they come back to me and said, no, that doesn't work, oh, things have gone up. Well, then that I have to make decisions based off of that, and those are, we just went on a freaking, for no lack of better term to me, a spending spree. And we just spent the taxpayers' money because we know more is coming in. I can't look at certain people and tell them that I think we spent their money. Yes, I agree. We spent it wisely as far as the branches and, I believe in the mission and all of that. But I want to know that every dollar was spent wisely.
Michelle, not to jump, I guess to jump in there, could there have been scope changes made in those branches that would have?
Oh, there was scope changes to go up.
I know, but there were no. But I assume there were no scope changes that says we need to reduce this one by, X square feet, or we need to take something out that
No, I mean, we would have had
or we could say, let's delay something. Okay. This thing was such on an accelerated plan. The other thing, Bob, is, okay, I'm holding that up.
Well, I'm not trying to attack Bob, but I mean,
No, I'm not. I'm making a point here. We have every year's budget book that has in it the capital plan, and it shows $113.2 million every year, including this year. Okay, that number should have been disclosed differently. And again, it gets back to an internal control issue in terms of the information that finance was using for the budget. And I'm not blaming finance because they were, as I understand, they were not included in the process. But we're telling the taxpayers for 5 years that we're going to spend 113 million, and oh, by the way, it's actually 130. So I hear what you're saying, but the other, to Michelle's point, there were no adjustments made that said we have limited resources available for this entire Prop L plan. It was, let's keep building and let's keep adding, and no scope changes, at least scope changes to reduce costs. And again, just to repeat, my architect says I'm 5 million over budget, and I'm saying the actual numbers are showing us far in excess of that.
And I think the other problem is that truthfully, the other elephant in the room, had Gordon not been asking for this, we still would not know. And that's I guess maybe one of my biggest issues is we still would not know, because I've said it before and I'll say it again. I feel like we were lied to. We were told what we needed to be told so that we voted a certain way. And I cannot even tell you the number of times I asked in building committee meetings when we were going over early on and making changes, being concerned if we were going over budget. Were we going to have enough money in here to do this? Because I can't even express, we just need to get this Riverside thing done. This Riverside thing has been a thorn. I don't want to say a thorn in our side, but it's been a thing that we've been dealing with the entire time I've been on the board. And here we are out of money when we were promised we would have it.
Let me just, what I really want, I said in the past, I really want to hold people responsible for things. After votes are done, we've got The Prop L review scoping X. So what are we getting out of the actual report that's made? Because obviously this is just to write the parameters of the what people will come to us and give us an idea on their bid to do something. Isn't that what?
Yes, this,
Okay.
yeah,
So
this is,
ultimately, it's going to come back to us. I think as obviously in your comments, this is going to be looked at closer by board members. Question: you look at Orvis just this morning. We go through it, and they recommend a comprehensive capital plan, budget, and something. And they're absolutely correct. I don't think this will happen again. So what are we going to get back from as much as $80,000? What we talked about, or 60? I can't remember the amount. So what are we going to get back from the final vendor?
well, there's, okay, let's go back to I guess, go back to the original intent.
Right.
There were always more than one phase. One is you had to scope this out and decide what you're going to do, because I think I mentioned at some point along the line, if you wanted to go back and evaluate every work package and every project, you're looking at somewhere, my guess is 250, 300,000 fees. And you're looking at different types of professional expertise, okay? We're not going to, there was never an intent to do that. So this is, some people have used the term audit. This is not an audit, okay? This is a special, this is an engagement for agreed upon procedures, okay? And what that means is that CFO Systems is going to say, okay, for the RFQ, and I'm speaking out of school here, okay, but just as an example, you're going to test, 10 we want you to look at one project within every package over X dollars, okay? And we want you to take, the 5 of the invoices off of the payments for that project that were made to J.E. Dunn. And so that brings some clarity to what we want to do, and it allows those who are responding to do so with some accuracy in terms of the time they think it will take to do that, okay? Now, we've already set a limit. If they come back and say, well, for the way you guys have defined it, it's going to be, 150,000. Hopefully it doesn't happen, because CFO Systems knows what our cap is on this, and they'll set the parameters accordingly. That's the type of thing that will be the outcome of this initial phase. There may be some other things that they tell us and other recommendations that maybe that staff can do on their own, and it doesn't require hiring an outside professional to do. But that's the outcome of this first phase. The second phase is actually to do the work which are defined by the output of phase 1. Come in and test things, look at the contracts, see that there's compliance with the architect's contracts, with the way the bids were put together, that they were billed appropriately, things you would normally expect an auditor do for a transaction type audit, okay? But again, we're not doing an audit. We're doing a agreed upon procedures.
All right, so that's more like under item 12, not to repeat what it says. Design incremental policies and procedures.
Item 12, are you talking about?
On the Forbes. That's a summary. They have 14.
I have to go back to their report, sorry.
Well, basically, my point is that this is for going forward. Is that what you're saying?
No. This is for looking at how we spent up to this point, $100+ million. This is not a forward look thing. Forbes was looking at, as they explained, a point in time of what our disbursement policies and procedures are. They're making recommendations for what the library should do to get closer to best practices. Best practices being relevant to the size of the library and its staffing structure, okay? For the Prop L review, we're going to look at how they spent 110 million, or, you know, I guess whatever the number is, because I don't know the number. Probably at this point, $105 million has been spent. So it is looking backwards, but it's looking backwards specific to Prop L and you know, contracts and billings and methods and best, you know, what industry practices. Bob, we have paid the architect, you know, and I'm not picking on the architect here. Maybe it sounds like I am. You know, part of the responsibility, as I understand, and when I've dealt with it, part of the responsibility of the architect is to help keep things in budget, in sync with budget. And I don't know how that happened or what the communications with the building committee were, any of that, because I wasn't involved. Okay, but you know, we have paid the architect at this point 11% of the contract costs, and I recall he said that their contract was for 8.7%. I don't know if there's other stuff in there. I have no idea. Okay. It's just,
Yeah, I agree. Yeah, I think they had something under 9%.
well, whatever it is, but you know, yeah. So, you know, and on a forward basis, we as a board should say, okay, if steel went up 20%.
Well, they went up 25. I was there.
Well, whatever the number is. So should I be paying the architect 8.7% of the cost increase on that? Just because the cost of steel went up? Nothing changed. All I did was pay more for steel.
Yeah. I have no idea, Mark.
I don't either, but that's why we're doing this.
So
say it's one of
this larger project. I understand that's in the past to help design for future projects. Again, the four of us.
That hopefully will be an outcome of this, is that we will learn some things and they will help write some of these policies and procedures, or at least help define some structure about how we move forward as well. I think that will be an outcome, but that's yet to be written. I'm with Michelle. I do not agree that we should sweep this under the rug and just move on.
No, I think we need policies.
Well, we need two things. We need a review of how we spent 105 million and how we're, you know, and we need policies so that the last 20 million gets spent, you know, with the appropriate level of oversight and you know, structure.
Well, my last comment, I'm approaching this from the standpoint that, you know, do I want to waste another X thousands of dollars on a project? And that's all I'm trying to be convinced of, is this project, this next, what CFO is working on, is it beneficial to us? Whatever the thousands of dollars.
Well, I'll give it to you this way, okay? I trust Quan's financial statements. We still spend $35,000 a year for an audit.
For what?
We spend $35,000 a year for the auditors to come in and tell us that Quan's books are okay. Okay, I trust Quan. I guarantee you he makes a few mistakes here and there, but it's not millions of dollars. And you know, so the financials come out and there are no adjustments that I can remember, and that's the way it should be. But I still have it audited.
Well, again, I'm trying to convince myself that another $60,000, whatever it's going to be, is going to be beneficial.
So it's okay to just go ahead and, like, $60,000 in the scheme of things is a drop in the bucket. We pay for more consultants and other stuff to tell us what we already know. And maybe that's the same case, but we're over by $17 million and we don't need to double check that to make sure that that's really in building costs.
Well,
I mean, that's crazy to me.
It might be crazy, but you know, so what are you going to do about it? Somebody says that I'm going to write a check backwards.
Well, what are we going to do about it? We're going to make sure that we have policies in place so this doesn't happen again.
That's why I said.
But I'd like to know.
If that's how we're going, that's fine. I think that's proper. To develop some procedures and policies. I agree with that.
But but I'd like to know. Then I guess, maybe it's my background where I was used to being lied to every day because that was my job in law enforcement. Maybe I'm just naturally suspicious of people, but up until this last year, I had complete confidence in everybody. So they have proven, I mean, this isn't $17,000. This isn't even $170,000, 17 million over what we told people. And it's just like because it's government money, we just need to give people a blank check.
Well, that's not what I'm implying at all.
Well, but it's like they don't need to prove that they spent this money wisely.
I
guess I'm confused I'm not trying to be argumentative. I don't understand.
Well,
why
we're going to spend $60,000 or $70,000 to help develop policies and procedures. I'm probably with that. If that's based upon this recent series years of this project, that's legitimate. I just want to know what comes out of this, whatever the amount's going to be. I totally agree with what Orvis has said. We need procedures and policies. And if this is what it's doing, go to review the current project. Okay, I just want to know what comes out of this recommendation to whoever this final.
Well, what happens if there is fraud? I'm just worst case scenario. What happens if there is fraud? Then
Obviously, depending on the time period, somebody's got to bring a legal action.
Right. So but if we don't go forth, we don't know.
I don't know what the final project, what the end of this project we're talking about. I realize 60 or 80,000 is much compared to 7. I get that. But are we going to get that from this study? That's what I'm asking. That's what Forbes has suggested. I concur. Is this going to provide us suggestions for policies and procedures?
Bob, if you want that to be part of the phase 2, I would call that a phase 3 project. Okay. So the initial phase 1 was to do the, I guess what I'll call an analysis and scoping, which is what this is. Phase 2 is to do the actual detail work. And to Michelle's point, what if we find we overpaid the architects by $500,000, or we overpaid J.E. Dunn on something? Again, we had one person reviewing things, which I understand to be Jake. Okay, Quan did not dig into things, and I had my policies, my disbursement policies said that anything that there was no requirement for the CEO to sign off on anything under $100,000. I guess I'm a little baffled by your hesitancy to tell the taxpayers, again, to Michelle's point, we spent up until a month ago or 2 months ago, we were telling taxpayers we were on budget at 113 million. I just showed you a schedule that illustrated how the numbers were manipulated. Okay. And in my view, I have a view about that. Okay. But we're telling the taxpayers we're on budget. We're telling the board we were on budget. The numbers don't support, the numbers we're being told as to the budget are not supported by the detail. My antennas go up. Okay. No different than Michelle's. And again, we don't know. Okay. I don't know what else is out there, but I am suspicious because of what I have discovered through the last several months. And I think the board would be, I think the board has a fiduciary responsibility to tell the taxpayers how and why that money was spent.
There are a lot of things that happened this last year that completely threw me for a loop. People's behaviors, once certain information started coming out, and that's all I'm going to say in a public meeting right now. But I think you can figure out probably where I'm going with that. There's enough that happened that we have, I don't know. We can, I guess where I'm at with the whole situation is we can agree to disagree. I feel like I was lied to. I feel like we have a duty to prove to people that every single cent was spent wisely, because I can't say that right now. I just can't.
I guess, and I really, you are my new colleagues. I don't know everybody. So I kind of asked, I kind of asked myself, well, why didn't the board look at this in 2019 or 2000 or whenever it was?
We asked and we did.
I don't know, because I'm not here. All I get back in the city where I live is, I tell them what I'm doing now. The first thing everyone tells me is, I love our library. Very popular collegial subdivision, but regardless, I just kind of want to know what this, whatever this thousands are going to be, if it's, I guess, go backwards. I mean, and I'm not backwards from the negative standpoint. It's going to be a review. I also want to make sure that at some point in time we do get around to establishing policies and procedures, whatever round of capital improvements for next.
I think that is probably on the forefront, and I'm sure it's somewhere on the top of Aaron's list. I won't tell you what his priorities are because I know he has a lot of them. But in due course, I'm sure he will address that. And I think we should leave that to him to handle. And we as a committee will take the committee role and hold him accountable to get that done. And as a board, we should hold him accountable to get that done, but let's let him do that. And if he thinks it's appropriate after we get through this to do a further engagement for somebody to help them write policy and procedures, then that can be brought to the board.
Okay, I'm through. I just wondered why you didn't realize we had tariffs back in last year.
Bob, I appreciate your cost comments, but again, when you have cost increases, you have a responsibility to manage against resources. And the board should have been kept aware of what those costs were and what the resources were. And the fact is, the board was not told we were over budget, and the public was not told we were over budget. I don't care about your cost increases. That's a reality of every construction project. But anybody who's managing the budget and anybody who's managing that project has to make decisions along the way.
We were not told of any price increases. I mean, until COVID hit and we started having what everybody now knows to be true, because this is part of my, this is part of my frustration, Bob, is we asked. I mean, when you ask over and over again, and the people that are being paid to tell you everything's fine. And hey, Yummy, I think you might be.
Yummy, can you mute your mic?
Yummy.
Or Cody?
Yeah, I'm sorry, baby, hold on.
But I mean, we asked.
Yeah.
So, I mean, I did ask. Several of us asked. So what I'm telling you is we asked, and I don't do well being lied to. Maybe everybody else does. But I'm not a fan.
I've really kind of said what I wanted to say, and I'm not, I laugh at you don't like being lied to. Politics is full of lies. I've kind of seen that.
Absolutely.
That's
but
too
the
bad.
Numbers, when we ask, I'm not politics.
No.
This is building. This was the basic numbers. Where are we at?
Actually, I don't want to prolong this. I just want to know what the purpose of this expenditure of the next project.
Bob, I think we've established that, so I'm not going to repeat it. So are there any other questions on this? Because I'd like to move to a vote.
Gordon, I had another question on reference was made to contracts earlier, and applying myself, I had two observations with regard to contracts. First of all, I think in November 2016, a contract was proposed to me as a voter at the previous iteration of a composition of this library that I should work for Proposition L, which I did very happily. I recommended the whole effort to friends, neighbors. Because quite frankly, the Riverside branch was my branch. Now it's Antioch. The Riverside branch is just in need of miracle replacing. And I also from the community where people love the libraries. So to me, there was a contract that was presented to me. I accepted the contract through my vote. As a voter, I said, as a taxpayer, I'm happily willing to accept the tax that's going to be imposed through Prop L. But implicit in that was an absolute sense that there would be moral stewardship over the many millions of dollars that come in. And that's what I think we're going to try to find. What stewardship was there? Second, I did contracts. Sure, prices are going to change. That's why we guaranteed maximum price. If prices go up, Jay Dunn had to eat it. So what's the difference? The difference was not in the construction costs that Dunn had. It was quite simply what we got in these dashboards. Now, again, redundant, that was a singular source of information that we at the board received regarding the money that was spent, how much is left over, how much is left over to address the projects that were left over. And at no time did I hear anything like, well, we're $1 million behind, we should take a look, or 2 million, or 3 million, 4 million, 5 million. There was information. And I think there is an absolute desperate need for us to find out where the money went. It's not our money, it's our taxpayers' money. And all of us are taxpayers that you might say to, again, a very minuscule percent, it's our money. And another implication of this, which I don't think is realistic, but the problem with this stuff is that it opens the door. If there's a credibility issue on the dollars, is there a credibility issue on other things? And that would be beyond heartbreak to even have that sort of idea get out there because of the incredibly great services this library provides. So we don't need the taint of what's, I believe, is apparent in the finance side to go to the other stuff. That's fabulous. I'm done.
Okay. Do I need to read the motion again, or can we just proceed to a roll call vote? Teresa, what's the rule? Do I need to read the motion again, or can you just?
No, it's on the screen and.
Okay. All right. Will you take roll call then?
Yes. Ms. Whitehall,
Sorry. Aye.
Mr. Dees,
Yes.
Dr. Pandolfi,
Aye.
Mr. Cook,
Aye.
Mr. Johnson.
Aye.
Motion carries.
Okay, thank you. All right. Next on the is a discussion of the budget process and timeline. So Aaron, I'm going to turn it over to you.
Thank you, Gordon. So I come to you today to kind of propose a different approach to tackling the budget. Looking at last year's process, I saw where there's some areas that I think we could make some improvements. So the overall idea of this year's process would be that it's more collaborative in its approach and gives us an opportunity to live out loud, which I see today we're doing a good job of that. But just come together as a group at the beginning and the end of the budget process to learn more about the priorities most trustees have and the library has, get a better understanding of our financial situation. So getting into the weeds here, but my proposal here is that we have formed an ad hoc budget committee that meets 2 points during the budget process, once at the beginning and once near the end. This committee would be comprised of the executive leadership of trustees and 3 committee chairs, or 4 committee chairs. 3, 4, yes. And And so at the end of this month, what I'm asking of the board is to meet that group of 7 to discuss current financial condition of the library, where we can propose some solutions to our cash flow shortages and shortages in the area of construction, get feedback from the board on their priorities, and then also discuss a process and timeline for the actual budget development. I believe we can do this. So in summary, what it would be is in February, we would have a budget committee that kind of meets, talks about issues, challenges, and needs for the next fiscal year. And in March, we would have a regular board session, followed by April, which would be a presentation of the summary of the budget and a detailed payroll budget, which I think we're required to present. And so in between April and May, then you would have your individual committees meeting and going through our proposal, fine tooth comb, and making any recommendations or submitting any questions to staff we can respond to. And then in May, the ad hoc committee would once again get back together to kind of iron out any details. And then in June, then we would submit our budget for approval. So ad hoc committee in February and May, a lot of work happens between that time. But our main goal here is to much more collaborative process when it comes to developing a budget and getting an opportunity to react to the board's priorities in terms of the areas that they have authority over. Does that make sense?
Does to me. Who are the committee chairs? Who are the committees, Aaron?
We have IT, we have personnel, we have buildings, finance.
Okay,
And just for the record, we also have fundraising. Michael's now the chair of that. So that.
Yeah, I have a comment whenever I can speak.
Teresa, I didn't pick up what you said. I'm sorry.
Oh, I'm sorry. Aaron was describing the committees and I added the fundraising and development committee as one also. Michael is now the chair of that committee as of yesterday, Ron.
Or actually was before, it just.
Okay, yeah, so Michael's the president of that, the chair of that, so we've got 5 committees. That would be finance and audit, building, fundraising and development, technology, and building.
Okay. Yami, go ahead.
First of all, to that list, I didn't hear personnel.
Oh, personnel, I'm sorry, yes, personnel.
So let me just go back and repeat so we have it accurate here, because I'm some reason the mics aren't picking up as at least on my end. So I have finance, I call it IT or technology,
Okay.
personnel,
Yes,
building, and fundraising. Is that correct?
and building.
I had building. That was the 4th one I mentioned.
Okay, so just one more time.
Finance, technology.
Finance. Yes. Okay, technology. I'll say I'm in. Technology, finance and audit, personnel, building, and fundraising and development.
That's what I have. Thank you.
That's fine.
Okay, this is Yummy. I'll just, can I say what I wanted to say?
Yes, go ahead. You have the floor.
Okay. Yeah, I think that Aaron has a really good idea about that. Totally on the right track. I just was curious, like he said, the heads of certain committees, maybe we want to sort of rethink that, and that maybe, that may be the best track, or just keep that open, because what I'm thinking is there's people like Michelle who have served on like building, finance, over a long period, that are not currently maybe the chair of a committee. So my recommendation is to just have that, like 3 board members may or may not be a head of a chair of a committee currently.
Okay. I'm not opposed to it. It just, this, so long as we follow the spirit of, or the intent of this process. My proposal for a smaller group was maybe to be less burdensome and demanding of people's time. But if the trustees or if the board feels otherwise, and people have the time, by all means, join us.
Yummy, just, I guess I don't have anything specific to, but, you know, the meetings would be open to anybody else on the board. I think Aaron's intent is that it be focused. It would be the committee chair's responsibility to carry the message back to the committee members in the follow-up meetings in March. Would that be correct? And
Right.
perhaps April as well.
April, yeah.
But you know, the risk is you get too many on there and you really didn't solve anything. So you end up with almost a full board. So I appreciate your I appreciate your concerns. I don't have an answer. I'm willing to kind of let, at least in my view, I think Aaron's setting out a good track to try and change the way this was done. If you remember historically, and I've only been in charge 1 year, but I think the historical practice is that, you know, the budget was broadly set by management. It was carried through the committees and ultimately brought to the finance committee, who had in the end very little input about the budget and the very few things to really even deal with. So I think this is a better. I like this approach, and you know, I think we give it a go.
Yeah, I think you misunderstood me. I was trying to reduce the number on there, not increase the number, saying that maybe if you add every chair of every committee, you're just almost adding the full board. It's like in lieu of that, maybe there's just other key people we could, you know, put on that group, so you wouldn't have to really have because once you have the chair of every committee, you're going to have pretty much a board quorum. So I'm just, anyway, my recommendation was just
That's
somehow
fine.
if that number be reduced.
Okay, all right.
Well, Yummy, my first draft of this proposal was a much smaller group. But I just had second thoughts about that I really wanted as much diversity in the ad hoc committee as possible and different viewpoints. So that's why I expanded it to the committee chairs. And really, if you think about it in practice, the way decisions are made, it's a good idea to have these committee chairs in the room. I do understand that fundraising and development that's kind of a dormant committee at the moment, but nonetheless, certainly the IT and personnel and buildings, it's important to have them there at the beginning of this conversation. Thank you. Well, and that's all I have for the time being. I mean, if you guys agree, again, I'm happy to go over this with the full board at the next board meeting. And I'm not kidding myself. I know it'll be a little more work, but I think at the end, it'll bring us closer together and easily pass budget in June.
Any other comments? Okay. I have no other business to present. Aaron, do you? And if that's the case, I would ask for a motion to adjourn the meeting. Or
So
Ron is a second.
Second.
And I guess we take roll. Teresa?
Ms. Wykoff,
Aye.
Mr. Dees, Dr. Pandolfi,
Certainly.
Mr. Cook,
Aye.
Mr. Jones.
Aye.